The markets may never go down again as the idiotic central banks pump up the money supply. What's up, everybody? Welcome aboard. It is Bubba's Bottom Line for Sunday, April the 11th. It feels like I've been gone from this office for so long. Well, we're back for a couple of days before we head back to Nevada. But in the meantime, we've got imbeciles in charge, and what a charge they have. They continue to pump up the money supply and tell us that we have no inflation. Oh, I don't know. I mean, it's interesting, when you run a service economy, yet you don't count fuel as part of your economy, as part of your inflation curve. You don't count food as part of your inflation curve because supposedly it's too volatile. Okay, well, I don't know. I know that Americans are spending a hell of a lot more for food and energy than they were, but that's not inflationary. The biggest part of your budget. No, that's not inflationary. Good thing my kids are grown. I don't have to feed them as much. But, the central bank continues to flood the money supply, which really does what? It masks the appearance of any inflation. And as we know, that the bubble that they're building, started by the most famous of them all, Alan Greenspan, okay, who is still recognized as a genius, God help us all, that, you can't let the markets play free. So you're going to end up doing what? You're going to end up destroying a majority of the people in favor of the few. That is exactly what is going on because in real facts, okay, not government facts, not central bank facts, in real facts, the only people that can truly benefit, from this system are the extremely wealthy, because they're the only ones that can truly invest and take advantage of these markets, okay, as they can leverage to the hilt to bring in to bring in more revenue for investing, okay. I mean, we are seeing margin rates at record highs, going past the 2007 record highs. What happened in 2008? I forgot. Oh, yeah, the markets collapsed. You have a setup that has absolutely no chance to work over time. It works now. It'll work in the short term. Okay. And what somebody wrote this week, it's making tiny bubbles and tiny bear markets, which means that the speed at which it happens are bang, bang, very much as we witnessed during COVID a year ago when the first big splash came down. But you really think that is going to continue? We're going to have those quick, fast markets? That history shows us, of course, if the current administration has their way, there will be no history. We won't be able to check it. But as history shows us, that this has to fail at some point because, again, Ponzi schemes always fail at some point, right? But you cannot continue to have very little growth, even though we have imaginary growth. Stimulus does not create jobs. It does not create growth. It creates nothing but reliance on more stimulus. It's just like drugs, like anything else. But, you've now got Walmart or McDonald's taking hundreds of stores out of the Walmart environments. Okay, that can't be good for anything. Okay, but again, McDonald's is going to the model of more basically all drive-through. Okay, which makes sense, especially in these times of COVID. And I don't know if we're, based on what I saw while I was gone, there ain't no more COVID. Now, I know there is, but I mean, based on the airports, based on the packed airplanes that I saw, based on the packed casinos in Las Vegas, to me, it looks like it's a memory. Okay. Now, again, I know it's a real virus. Again, I don't know the degree at where it's going to end up at. I do know that now there is an abundance of vaccines if for those who want. And I know there's many that don't want them yet and aren't ready. Well, listen, I think that's the correct thing. Excuse me. I think as Americans, we should have our choice of whether or not we want to be vaccinated. I've been vaccinated. I was happy to get it. Okay. I don't know if it's going to work or not. I've been advised that it was a mistake, but listen, I'm willing to take my chances. But I think that, but the bottom line is we had that opportunity, and there is now obviously not a surplus, but enough to go around for those who want to be vaccinated, which is a good thing. Okay. But I think, you look at what's going on in California. Of course, you have to question yourself for anybody who'd want to live there in the first place, other than the beautiful weather. But the tax hikes, and you got the Newsom, who is a total oblivious idiot. Okay, he got shot down again, trying to limit religious home worshiping, group gathering. I mean, is this going to be the new way of control, of telling people what they can and cannot do? And again, I go back to always I've said, basically from the very beginning, I believe that people, as Americans, as supposedly free, should be able to make their own decisions as to what they want to do. And I think people that want to worship, I've got some good friends that go to church, and finally they're so happy they can actually go back to church instead of being online for church. I think that, you should have that freedom. Okay. But, I think you're going to see, more of the government trying to take control of our freedoms as Americans. And this is, you may not think it's a serious issue. I think it's a very serious issue. I think that the more power that they are able to gather and garner away from us, okay, the more they're able to destroy the middle class with their moronic policies that we have now, basis monetary and other things. You're really causing a destruction. So are they idiots? Are they geniuses? So that they can bring all the money to the rich, okay, and to the extremely wealthy. This is something that is a debate that will go on forever, because, of course, the more money you have, the more flexibility you have in the way that you get taxed on it, the way that you take distribution of it, and even the way different things are taxed in general, which is, again, goes back to my favorite person who I can't stand, Warren Buffett, who complains that taxes aren't high enough, but of course he takes only a $100,000 a year salary and takes $12.9 million in dividend income, which obviously is taxed at a much lower rate. It's kind of like we talk about the difference between trading futures and trading equities. The tax rate is much better on trading futures. Okay. So, I think you look at the real estate markets, they continue to boom. Supplies are going lower. Sales are increasing. But where's the workers? Where's the jobs? Okay. Are we betting everything on this new infrastructure package that may or may not get through? Look, we need it. We've been promised infrastructure for, 25 years now, 30 years. Okay. Oh, and hopefully we'll get it done, because at least, unlike stimulus, okay, a package for infrastructure does what? It puts people to work. It generates, if a person is working, they're willing to spend. If they're willing to spend, they're willing to help grow their own economy. Okay. But, the stimulus packages, again, just giving away money to give away money is stupid. And so is the universal income, what they're talking about. And it's help us all if they get this done. They've already done it in a couple of places. Of course, they have eliminated, they've made this for one sect only, but we'll see where that goes. But, look, you've got many, many things to think about here. But we know one thing for sure, okay, that cheap money will continue to fuel the markets. Okay, that is a fact. Okay, cheap money fuels markets because there is enough out there, and you take the wealthy, they can really fire it in here. So it's going to continue to fuel it. Now, one of the flies in the ointment coming up here pretty soon might be a union vote at Amazon. Okay, Amazon, obviously a huge company. Okay, one of the biggest, but they are non-union. Now, I hope and pray that they don't go union. I think that the people that decide to vote for union miss the big picture of what unions are today versus what they were when they were needed. At one point, they were needed just like the minimum wage was needed. But now they need to pad their pockets. They need to pad their bank accounts some more because the employee, it always seems that the employee gets screwed. Okay. You want to look at some of the really bad deals in the world. I mean, look at the professional football player. Yes, some of the guys make a lot of money, but the union itself is the worst for the player. Okay. So, but if they get, union control of Amazon, help us all. I mean, that's going to take a lot of, first of all, it's going to increase costs dramatically. Okay. So I think that I'm hoping that the employees are smart enough and know that they get paid enough that they don't need to go into this union, but we'll see what happens. Okay. And, listen, is the bonds, are they going to be able to control this? Well, we'll talk about more in our market segment. But I think the biggest story that has been untold or unwritten this week is the co-founder of Black Lives Matters just bought a well over $1 million home in an exclusively white California suburb. Okay. Just outside of Los Angeles. Okay. So all of those charitable dollars for the movement went to a new home for Black Lives Matter in a white suburb. Okay. It makes sense to me, which is one thing about all charities and all gifts like that I've always found extremely problematic is I know a number of fundraisers that do raise for charities, and I would never give to them because when I see they live in $2-3 million homes, I know my money's not going to the charity. I want my money to go directly to the charity. And I think that becomes another issue, but we won't hear about that issue because, of course, why would we? I mean, certainly, it doesn't create any turmoil for the masses, but of course, if it was anybody else, there would be, you hear stories. But at the end of the day, think about that, okay? Buying a home with most likely dollars that came from the charity to help support the movement, okay, from the founder. You tell me. This is Bubba's Bottom Line, Todd Bubba Horowitz. It is Sunday, April the 11th, and of course, we are sponsored by our friends at Family Farms who, again, along with us, we try to help farmers do their best jobs at, listen, they should be worrying about farming and worrying about the cost of inflation, but we help them worry about protecting the cost of their product. Okay. And of course, we've got a couple of brokerage partners. Now, we have more than brokers than these, but these are the partners that we prefer. One being CTG, and that is for futures and commodities. And, CTG does a terrific job. They got great customer service. They're the only ones authorized for our letter direction trading, which we did yesterday, a webinar for our micro mini futures portfolios, which they fit in perfectly with. And of course, if you'd like that recording, you can email me at bubba@bubbatrading.com. But CTG is a phenomenal organization, very intent on customer service. And if you want information about them, you can go to info.capitaltradinggroup.com/Bubba. Okay. And of course, our other brokerage partner, which is Tradier, for equities and options, all I have to do is say $10 a month. Okay. Just think about how much money you'll save. I don't understand how you could not be looking at the savings. I mean, I save $10,000 a month, okay, on commissions by being with Trader. Now, again, your brokerage is up to you. It's your money. But I mean, why would you not want to save that money? And in the meantime, they've got great customer service, and we've got their APIs, which allows us to auto trade your portfolio if you choose to do so. It is not a requirement. You don't have to go to Trader. It is an option that we make available to our members. It is free, okay, but we have automation for all of our equity portfolios. And of course, our commodity report written by Andy Hecht. And, look, you can buy components, you can buy it all. It is the best written, most informational commodities report I've ever seen. He just finished the quarterlies. And of course, that's at technomental at BUBBATrading.com. And if you'd like to help us with our high school program as we rebuild it, you can go to Patreon, patreon.com/BubbaTrading. That's patreon.com/BubbaTrading. In the meantime, let's get back to Bubba's Bottom Line and yours truly, Todd Bubba Horowitz. Welcome back. And this is Bubba's Bottom Line for Sunday, August, March, April. I get the month right eventually. April the 11th. Okay. And of course, this update will be brought to you by our friends at the CTG Group. Of course, I do have other brokers, but for futures, commodities, and our letter of direction trading, there's nobody like them. Check them out at info.capitaltradinggroup.com/Bubba. You'll get all the information you need, but they are the best in the industry, although we do have others. Okay. So what do we got here? Well, equities, Dow, new highs. S&P, new highs. NASDAQ gaining quickly after being the weakest index just a couple of weeks ago, suddenly explodes and is ready to make new highs. And I would suspect, although the Russell was down for the week, and we are actually short the Russell, we're long the other three, we're short the Russell, but I would suspect that you will see that the Russell may indeed catch up with the rest. I mean, if you actually look at patterns and understand, you will see that the Russell is in the exact same pattern the NASDAQ was when that one was the weakest. We'll see. We're still long three and short the Russell. We'll see what goes on from here. I have no idea what it's going to be, but my guess is it breaks to the upside because that's where the markets are headed at the moment. And I think you look at the metals market. Now, of course, I take a lot of heat and get beat up all the time for writing that we're still short, and we are still short across the board. Gold, silver, platinum, we would be short, but because we no longer trade it because of liquidity, I give you the signal, it's short. But, it was higher last week, very, very marginally. Okay, and it could be getting ready to change and go higher. But until it does, I'm a mechanical trader. We're using an algorithm that makes every decision. And, you don't have to send me hate mail. I'm only disclosing my exact position. Well, I tell you at the same time that I'm buying physical metals all the time. Okay, trading and investing got nothing to do with each other. Remember that. In the meantime, we're short across the board, and we will stay short across the board until we get a buy signal. Crude oil, another down week, so it's now down for 4 out of the last 5 weeks, but yet we're still holding onto that $58 a barrel level. Okay, the criminals from OPEC got us over the barrel. There is some interesting patterns in crude that look like it could go lower. But of course, it would have to go significantly lower to help us with our fuel costs. Again, of course, we don't have inflation. We have to worry about that. But so in the meantime, we are still short. But certainly that 58 is proven to be an extremely strong level. And as I said, we've been down 4 out of the last 5 weeks. And the one up week was very marginal, but that's what it is. And so we're still short. Copper has been a little bit choppy lately. We are reversing tonight back to the short side. Okay, so it's been a little bit choppy after a huge run, and we made a package. It is now chopping back and forth, and we are going to be reversing once again. Natural gas, which we are long, it looks like crap, but at these lower levels, it's hard to want to be a major seller either. The bonds and the notes are battling again. It looks like the Federal Reserve and central banks are actually having some ability now to push them back a little bit. Okay. But overall, we'll see. You're coming to a key area where the bonds and notes could actually reverse, which means the bond futures would go higher, pushing interest rates lower once again. But I don't think that's actually going to happen. And I think, again, because of the bubble building that we're creating here and the Ponzi scheme, I think the bond traders are going to make another attack or another try to step up one more time, because they have enough power to potentially push the Fed to hike rates, which they should be doing anyways. There's a huge demand for money, but you can buy the housing sales. They need to slow it down. Otherwise, we're going to have runaway inflation. Okay. So we actually need higher rates for more reasons than one, and one being also fixed income individuals. And we're getting very close. You get the 10 years now at about 1.7. Okay, got almost to 1.8. If it gets over 2, you've got a very good chance that money will come out of the markets, especially for those that don't want to be that exposed, with their portfolios. Okay, listen, they have X amount of dollars. They want to be able to live the rest of their life, and 2% is better than having a chance of busting out. Right? The dollar looks bad, but we're still long it. It'll change soon, though. I mean, it's interesting now. We are actually long the euro, long the dollar, which is like counterproductive since the euro is 69% of the dollar index. But that's what it is. I mean, when it changes, it'll change. Grain markets, listen, corn up again. Okay, and continues to rise, and we're targeting $6. Soybeans flattish weak, but look at where they're at. Okay, it looks to me that corn and beans and now wheat will change tonight or tomorrow, depending on when you decide to do it. Wheat will now be long. We've been short, but wheat was up last week as well. And as we said, when I went short, I said, look, I'd like to be long, but I understand and I'm going to follow the rules. But it looks like the grain markets want to continue to charge higher. I actually texted on Friday the WASD report. I said before it, most likely you'll see a little bit of selling from this report, because they were, as the last report, they were over bearish and we got the spike rally. I think here we were over bullish and got the little bit of a pullback, but it wasn't anything dramatic. I mean, actually wheat and corn were still up on the day, just not that much. The meats look great. We're long across the board. They weren't up huge last week. Well, hogs were up huge again, of course. Hogs only go up now. But, you have cattle that looks good, and feeder cattle looks good as well. They're both just, backing in and filling, but the trajectory is higher. And as I've said many times over the last few months, the setup looks very much like the grain market, like we're going to get a huge break to the upside. Now, I don't know how high they can go. I've heard talks of, feeders at 160, 170. Look, I don't make those kind of predictions. Right now, I can see one level at a time. It would not surprise me, to see a big move. But of course, I'm sure when we see that big move, those who thought they wanted to sell some there will start to get greedy and try to buy them. In the meantime, they look good and solid. In the softs, we're still short across the board. It was a very moderate week, but we're short cotton, cocoa, coffee, sugar, and OJ. And again, there were some pain days and there were some profit days, but some of these markets are getting very, very, very choppy. And, again, at the end of the day, we will see where it brings us to. But it is a chop fest, okay? And that's part of markets, right? The consolidation phase is always part of markets. So we'll see where it brings us, and we'll be back after the break with our commentary right here on Bubba's Bottom Line for Sunday, April 11th. So we'll step out and be right back. So kids, we talked about CTG and our other brokerage partner, and I do have other brokers for full disclosure, but our other brokerage partner is Tradier, and that is for equities and options. Number one, it's $10 a month, which is amazing. Number two, they've got terrific customer service. Number three, we've got their APIs, which means that our algorithms can be automated if you choose to. And that, once again, I say to you, that is your choice. It is not a mandatory. It's not a part of being a member. It is something that is offered if you want to use it. If you want to stay where you're at brokerage, you can do that as well. We don't care where you broker. We have no interest as to where you're broker. We've just found a place that we could use to make it easier and better for you. Our partners are family farms, and of course, it'd be nice to be able to get out. And I know the July event's going to go off big, so I get to go out in person and meet with everybody. But Again, I can't wait to get out on the road and hang out with the farmers. And I know it's busy, so I got to be careful and pick my spots, but I'm excited to get back out and roll on there. And, our commodity report written by Andy Heck, Technomental, you got to check it out. I mean, you got components now. There's a lot of new features to it you can check out. In the meantime, you can go to BUBBATrading.com and check up Technomental and our high school program at Patreon, patreon.com/Bubba Trading. That's patreon.com/Bubba Trading. We'll be right back. We're going back right now in my commentary. Welcome back. It is Bubba's Bottom Line for Sunday. And of course, every week I mouth off about something. And this week, I think it's very interesting. We've seen a dramatic move in the crypto space. And suddenly, the market cap went from 800 billion to now just about 2 trillion. Okay. And you've now got the European Bank, ECB, okay, saying, well, it's not money. Okay. And of course, as these central bankers and the feds, try to poo-poo and bash this stuff out and try to get their handle on it and control it, they are losing more control. Because what's interesting about what is money? Money is this anything that you will exchange for something else of value, whether it's rocks or whatever it happens to be. If you're exchanging a product, okay, for something, the exchange of wealth takes place. That's price discovery. That is a currency in work. Okay, so they can say that it's not a currency or not, but they're wrong. They would be wrong. And the other big story of the week is the flat tax that you heard the genius Janet Yellen talk about, a worldwide flat corporate tax. Now, what are the chances of that ever passing? Okay. What are the chances that any other country in the world would agree with that? Okay. And the answer is zero, nil, none. Because who wouldn't want Apple or Amazon to have their corporate headquarters there and pay them the taxes? Okay. Do you think that any major country would agree to a flat tax with the United States of America? Just because we've given away everything else, do you think they're going to give anything back? Have we ever gotten anything back from anybody from all the efforts we gave? Okay. The only time we were in better shape was when the last president was in office, we had things under control. Now, let's just give everything away. And you think that you're going to get one thing back from any other country around the globe, you are out of your mind. There is no way that any country agrees to a flat corporate tax. So we will see higher taxes, corporate. You will see higher taxes at the higher end earning. And you know what? You will see higher taxes at the lower end because there is no way to finance everything they're doing without raising taxes because governments worldwide produce nothing but spend it all. This is Bubba's Bottom Line. As always, I thank you for being a part. And of course, enjoy the Masters if you're a fan. Justin Rose, I can't believe that guy is still in the lead. Had a rough day on Saturday, but Jesus, how can he still? Guy's older than the hills. How can he win this? I'm looking for my man Siwoo Kim, who broke his putter. I'm so mad. In the meantime, enjoy the Masters if you're a fan. Have a great weekend, the rest of it, and we'll see you tomorrow with another daily update. In the meantime, as always, I thank you, enjoy, and we'll see you next time right here on Bubba's Bottom Line.